Hey, happy Friday. Hope you're having a great week. Checking in with the rates update. We had a small uptick in rates here this week, and we had some good and we had some bad. And so the good was a couple inflation numbers that we got for June, the consumer price index report and the producer price index report. Those are measures of inflation at the consumer level and then at the wholesale level, which is, what producers of goods are paying to create those goods. And then those costs generally get passed on to the consumer. So, especially with the consumer prices, the increase in oil that we saw at the beginning of the Iran conflict, that really drove up inflation. And so now with the price of oil coming back down, that's helped to bring inflation way back down. And so within those reports, we saw a big decrease in energy costs. We also saw some decrease in the cost of goods, excluding energy. So that was very positive to see. So those numbers came in below expectations. The bond markets received that very positively, and we saw some improvement in rates. Now, we've had a renewed activity in the Iran conflict, and that is pushing the price of oil from in the high 60s per barrel just a week and a half ago, and that's basically what it was before this conflict started. Now oil is trading in the low 80s per barrel, so that could kind of erase some of these gains we've had with inflation. So remains to be seen on how that all plays out. But we're also seeing economic data that's still showing the economy is pretty strong. The job market is relatively strong, consumer spending is pretty strong, and so good economic news is usually bad news for the bond markets. And so that puts some pressure on bond rates to move higher as well. So, bigger picture, it's the inflation aspect that's going to drive where rates go from here. And if the Fed can achieve results in getting inflation down to 2% growth per year or less, then that could pave the way for mortgage rates to come down along with it. But if we have a strong economy and we have inflation that's remaining persistently high, it's going to be really hard for rates to get any lower than they are right now. Hope you have a great weekend. Talk to you soon.